I've never seen myself as just one thing, and I made sure no one else could either. By staying true to myself, making my own path, rising above expectations, and opening the door for others to be their true selves. The first spirit, made with VSOP Cognac, finished in bourbon casks, Martell Blue Swift, soar beyond the expected.
Good morning, good afternoon, good evening, and good night. I am Illuminati, and this is the Crypto and Cognac podcast show, and welcome. As always, I'm being fueled up by my good friends at Martell, and tonight, because we're going to be talking about all the exciting things that 2022 gave to us, I decided to draw for the big boy, crack a new bottle with you guys as we get into this 2022 roundup. So guys, thank you for being with me as always. Shout out to my friends at Massy Connoisseur for always keeping me hydrated. It smells so damn good. So pull up a seat, get yourself a drink, take out your pen and paper, make your notes, bring your notes to me, and let's have a fun time, guys. Take a drink. Now, going through and preparing for today's episode, and the reason I don't have a guest is because when we have to talk about these things, I prefer to talk to you guys one-on-one. So, in preparing for this particular episode, it really hit me how much we've endured in 2022. So, as we start talking about 2022, I'm going to jump a little way back, right, to 2021. So, in 2021, crypto was coming off of euphoric highs, right? We had hit all-time high 69,000. Everybody was excited. We were headed to the moon, 100K. I was excited to have George come on the podcast. We still had to wait. Maybe next cycle we'll see George when we hit 100K. But then Murphy decided to visit. Murphy's Law took hold of markets, and particularly the crypto market in 2022, and everything that could go wrong seemingly did go wrong, right? And in 2022, the crypto market has endured an environment of tightening monetary policy, geopolitical turbulence, the likes we've not seen in decades. This led to major sell-offs in all markets as people moved away from risk-on assets like crypto and tech stocks. We also saw the implosion of major projects in the space like Terra Luna and their stablecoin, their algorithmic stablecoin UST. We saw the bankruptcy filings of multiple centralized companies in the crypto space, Celsius, Voyager Digital, and recently we saw the climatic implosion of FTX exchange, once the third largest crypto exchange by volume, and its contagion and mistrust has formed an environment where we see somewhat of a black hole having been created, and now it is threatening to take down Binance, the global leader and the largest exchange in the cryptoverse. So a lot of people have been asking me, and at points in time in this year, I really had to ask myself too, this year has tested my conviction in this space. Like you guys will not even understand. So the question is crypto dead? Right? So how do we start? Right? So I mean, while it's no secret that it's been a difficult year for crypto, it's also been a difficult year for all global markets. So the US stock market has fallen 15% in value, bond markets have fallen 20%. We've seen individual stocks fall 80%. We've seen Amazon become the first company in the history of the world to lose $1 trillion in value as it relates to its valuation. So suffice it to say, it's been a wild year. How did it start? So early in 2022, we saw central banks kind of pivoting from their initial bullish position of printing money, right? And we started seeing them making economic changes, monetary policy changes, and we started seeing a tightening of fiscal policies. The Fed, the US central bank, started rate hikes. That is what's kind of started putting pressure on risk on assets like crypto and like tech stocks, like we said, right? Now, that was the initial environment in which we started, right? But that started, I guess, the ball rolling, right? We were coming off of a market topping 3 trillion market cap for all of crypto. And then what happened? So the first event, I would say, the first event that really started the conversation rolling around what type of year this would be for crypto. And I forgot about it until I started doing research for this particular episode, is the Ottawa protests and the Emergencies Act in Canada. I don't know if you guys remember that, right? The truckers were striking during the pandemic, and Trudeau stepped in, Prime Minister Trudeau stepped in and granted emergency powers that would allow Canadian banks the authority to freeze accounts of the truckers participating in the protest, as well as supporters of the protest, right? And crypto was kind of, came to the rescue as a means for people to be able to support the trucker protest, for truckers to be able to support themselves through the protest. Crypto came as a knight in shining armor. But we also saw a bunch of different people, a bunch of different crypto wallets, centralized crypto wallets, freeze accounts or freeze crypto wallets connected to the Freedom Convoy. And these wallets, well, not freeze, but blacklist, right? Because they can't freeze it. Your keys, your coins. But blacklist those wallets. So very early in the year, we started seeing this narrative of some of the problems of centralized entities having a dominant role in the crypto space, right? And so that was early February. And then late February, Russia decided they were gonna invade Ukraine, right? It was the first major conflict in Europe in years, right? The world was losing their mind because they were seeing all these Ukrainians having to flee the country. A lot of projects that I was working with, that I was involved with, we had developers in Ukraine who had to, pack up and get out of the country, go to countries like Poland and stuff like that. And again, we saw crypto coming into the environment, knight in shining armor, but also as the villain, right? So knight in shining armor because the donations were pouring in from across the world via crypto to Ukraine to allow Ukrainians to be able to live, to be able to support themselves, sustain themselves during this conflict. But also as a villain because we saw Russians being able to skirt economic sanctions through the use of cryptocurrencies as well. So we saw the mainstream media having a rough time of trying to decide whether or not they were pro crypto because it was helping with donations or anti crypto because it was being used to skirt sanctions, right? And then March came, and we had another big thing happen. The US government finally took a solid step towards regulating cryptocurrencies and to bring more clarity to the crypto industry. Why that is interesting is because, as you guys know, a lot of the conversation right now that is happening globally is around crypto regulations and how it should have been or could have been and might be regulated more in a more definitive way to protect users, right? But in March, President Biden issues the crypto executive order, which we had been waiting on for some time, to kind of outline a position for how the US was going to start regulating crypto. And I think at that point, people started becoming a little bit more optimistic again in terms of what this year might eventually look like for us for the crypto space, right? We had regulations, we knew how we were going to operate, and we were going to start pumping. Boom! Terra Luna starts to implode, right? And with that, their USD stablecoin depegs the US dollar, and investors lose billions as USD blows up and the overall market goes with it, right? Pressure on all markets, prices are dumping, people are fearful. Now, a lot of CFI companies were caught up in that particular Terra situation because Terra was very attractive for investment, right? A lot of these centralized institutions were earning amazing yields, and people had their money pouring into this particular space because everybody wanted to benefit from these high yields. So some CFI institutions, having been over leveraged, having lent significant funds to hedge funds such as Three Arrows, which lost a tremendous amount of their capital in the sell-off that followed Terra Luna, right? Three Arrows, along with many other leverage hedge funds, defaulted on loans owed to many CFI companies, and these CFI companies were forced to file for bankruptcy. CFI again, right? Nevertheless, we saw and we saw a pattern kind of emerge, which is scary, and it now puts every owner, founder, leader of a CFI organization in a ticklish position. What do I mean? So when the things started happening at first with Terra Luna, the founder, Do Kwon, came out and he said, yo, listen, we good, right? We have more than enough Bitcoin reserves to plug the hole. And that turned out to be false, a misrepresentation, a misunderstanding of their position. Whatever it was, it turned out not to be the case. And Terra Luna went under. A few weeks later, we saw pressures on another CeFi organization, Celsius Network, where people started withdrawing their funds in mass. And again, their founder, CEO Alex Mashinsky, stepped up on crypto Twitter and he said, listen, we're not worried. We have more than enough money to cover withdrawals. We ain't worried. We ain't worried about nothing. Boom! Bankruptcy. Apparently, they did not. They too were over leveraged. Right? Voyager Digital, they also were an attractive yield provider. They also failed, and their users lost their funds. And at this point, we start to wonder, okay, who can be trusted? Who can't be trusted? What do we do? How is this thing gonna go? Something that happened in between there or shortly thereafter, which I think is worth mentioning, we saw the US Treasury ban Tornado Cash, right? So banning a platform that is used to hide the source of Bitcoin transactions or crypto transactions, right? And that was a significant. I think it was a significant occurrence during the year, but it was quickly, kind of passed over because of everything that was still going on. Celsius and Voyager, the fallout from that whole situation was still kind of happening. So that got quickly passed over. And then by the end of summer, we saw crypto markets started to show signs of stabilization. What we thought that the leverage or over leveraged in the ecosystem had seemingly been flushed. Investor confidence began to return. Certain indicators like the CoinDesk Market Index started to rise, and we also had a lot of talk in the market about the ETH merge, the Ethereum merge, and what that would do for the industry, how it would make ETH so much scarcer. It would make ETH so much more environmentally friendly that would cause tons of institutional investors to come into the market in a significant way. We had also seen crypto exchange FTX, Sam Bankman-Fried, stepping in to rescue some of the larger CeFi lenders like BlockFi from bankruptcy. So it looked like things were starting to catch. We were starting to catch a lift, right? We were starting to come out of it. But then the ETH merge happened. Ethereum didn't move. Everybody was talking about ETH merge and how this is going to be the flipping in. Ethereum is finally going to surpass Bitcoin in terms of market cap. Merge came. merge went. Ethereum had a little rally leading up to it, but more smoke than fire. More smoke than fire. So we waiting, everybody kind of waiting. Something else significant that happened, for those of you who dabble in the shitcoin universe, Elon Musk acquired Twitter. And for those who were paying attention, you all would have seen there was a mini bull run or a mini rally that sent meme coins on a pump, right? So Doge was doing well, Shiba Inu was doing well. Everybody was started to pump and catch a length again. And, everything was going nice until November. Remember the 6th? Was it the 6th of November? When a CoinDesk article brought to light some shocking revelations about FTX and their sister company Alameda Research and their incestuous relationship as it relates to funds, how much of Alameda's collateral was being held in FTT tokens, which is the native token for FTX exchange, same owner, which created some instability or some fears around the industry, which led to CZ Changpeng Zhao making a decision and deciding to publicly state his decision to dispose of Binance's holding of FTT tokens, which was significant, right? That kind of sent the whole space into a frenzy. Everybody was like, yo, what's going on? Why? We saw the CoinDesk article, but clearly if CZ scared, the rest of us should be scared, right? Traders started to withdraw their money from FTX in mass. Who did. $6 billion withdrawn in a matter of hours. Traders began dumping FTT tokens like crazy, and the price of FTT fell from $26 to $1 in a few days. Again, stepping back to the beginning of all this, Sam Bankman-Fried went to crypto Twitter and said, guys, I know you're all concerned, but we good over here. We got this. We have money like dirt. And that wasn't the case, right? And since then, FTX first paused customer withdrawals. Then they opened customer withdrawals to only customers in the Bahamas. We saw about $1 billion withdrawn in one day. I think that was around the 11th or 12th. And then it was thing. And then FTX files for... Wait, I missed a part. So when things start to initially spiral, CZ stepped in and said, you know what, guys? We have a non-binding, we're going to enter into a non-binding agreement to buy FTX, right? We're going to take a look at the books, and once everything copacetic, once it's just a liquidity crunch, we're going to step in and we're going to bail them out. We're going to buy FTX. They had a gander at the books. And they say, not of this, not, basically CC said, I ain't throwing good money behind bad money. And as things unfolded with that situation, we found out how bad the situation really was in FTX. Um, yeah, so fast forward, they file for bankruptcy. Sam is removed as CEO. John Ray III steps in as interim CEO. This is the guy who has dealt with some of the biggest bankruptcy proceedings in history, including Enron. And yeah, I mean, and for some reason, despite everything that's happening, people's funds being up in the air, up in smoke, we're hearing all these stories about FTX and Alameda orgies and these kids just doing drugs from our apartment and living their best life on customer funds. Sam Bankman-Fried continued to live openly, continued on, he went on a media tour of such. The New York Times had him at a conference. Um, he went on a chain of different Twitter space conversations where he tried to tell his side of the story. But all the while, in the background, we have John Ray III trying, and his team trying to make sense of the nonsense and the madness that is FTX Alameda, FTX USA, and some of their other subsidiaries. And I think one of the most frightening and scary things for me when I realized, you know what, the shit had hit the fan was when he said that the FTX fallout, the FTX record keeping and everything like that, it was the biggest. It, I don't want to misquote him, but he was basically saying it was the biggest pile of toots he had ever seen. The greatest lack of structure, the greatest level of disregard for corporate governance and just record keeping that he'd ever seen in a company of that size. And I took the time to sit down and listen to his hearing, his cross-examination before Congress yesterday. And it was alarming to hear him reference the fact that in addition to having no board, in addition to having no CFO, in addition to having no actual person in compliance roles, even though people had those titles, they weren't actually doing the job, that this multi-billion-dollar company at one time having a valuation of over $30 billion was using QuickBooks to do their accounts. Invoices and payments were being approved using Slack messaging. Conversations were being held between executives using Signal and other social media platforms that they could then that would be deleted after a certain amount of time. It was crazy to even think about. And then it wasn't shocking that ultimately it led to charges being laid against Sam and him being taken into custody, arrested by Bahamian police on 8 counts of fraud. Let me read it out to you all. So conspiracy to commit wire fraud on customers, conspiracy to commit wire fraud on lenders, conspiracy to commit commodities fraud, conspiracy to commit securities fraud, conspiracy to commit money laundering, and conspiracy to defraud the United States and violate the campaign finance laws. In addition to that, the SEC and I think the CFTC also laid 2 sets of charges each. So I think in total, we're talking about 4, 8, 12 charges. What was interesting though is they decided to arrest Sam mere hours before he was supposed to be interviewed by Congress on everything that happened with FTX. And it left a lot of people, including myself, scratching my head as to why not just let him testify in front of Congress, go on the record, be grilled by these congressmen for hours, and then arrest him the day after. Like, I don't understand. I don't understand what was the benefit, you know? So the tin foil hat wearer in me has to ask questions about, you know, like, what was the value of that? Who did it benefit to not have him be interrogated by Congress? Now we know that Sam and his team have been some of the largest donators to politicians across the US. Him donating heavily to the Democratic Party, and one of his right hands donating heavily to the Republican Party. Now make of that what you may, right? But to me, it seems a little fishy, right? And I mean, we could talk about FTX, we could talk about the garbage, the contagion, everything that has happened with it so far, so many projects, strong projects who were either invested in by Alameda, who trusted FTX as an institution to hold their funds, are now left in a troubling situation where they too no longer have the funds to be able to give to their customers. So even if they were operating in good faith, just by trusting the third largest exchange in the world, they are now, you know, in a shitty situation. There are millions of people who now are left to wonder and wait to see whether or not they will get anything back. If they do, what does that look like? 10 cents on the dollar, 5 cents on the dollar, 50 cents on the dollar. John Jay III and his team said that they have so far been able to recover about $1 billion. But as we've heard it speculated, the whole seems to be closer to $10 billion. So if the whole is 10 billion and they only have recovered 1 billion, we're talking about 10 cents on the dollar for customers, investors, whoever has, you know, trusted SBF and his team with their funds. SBF so far is the only one who has been arrested. I look forward to seeing Caroline, and who's the former CEO of Alameda, and some of the other players follow him. And I hope we we see him brought before court and ultimately held accountable for this major failure. Since then, people have been very skeptical about centralized exchanges. Um, decentralized, the other centralized exchanges have decided to come out and try to get in front of it. CZ championing the cause of the idea of proof of reserves, showing that they are yeah, Debs. Apparently, they did have an accountant, the first ever accountant to be in the metaverse. Mr. John Ray said he never heard of this accounting or auditing firm in his life. Anyway, where was I? Yes, Binance, right? CZ and they decided they're gonna champion this idea of proof of reserves. But even when these centralized exchanges started doing proof of reserves, we started seeing some big transactions moving around between wallets owned by these centralized exchanges, right? Money sent by accident, right? Somehow, right at the same time that they were supposed to be audited for proof of reserves. We have more digging to do on that. But since then, people have been like, yo, don't trust, be safe. So get your money off of exchanges. And what we've seen is that has affected Binance. Binance over the last couple of days have been under some pressure, having billions of dollars withdrawn, billions of Bitcoin moved off of their exchange, record numbers of Bitcoin. And CZ has, he's taken a slightly different route. I guess he didn't want to follow the trend of saying, guys, we got this. He decided to say, you know what? This is a good, it's important for exchanges to be stress tested on their reserves every now and then, right? So he thinks that, this is a great thing and this should happen regularly with all exchanges. CZ, buddy, I am a huge fan of Binance. People in my community can attest that when they come to me and they ask about an exchange where they could start their journey, I say Binance. Buddy, I hope for your sake, my sake, our sake, crypto's sake, as you guys are the largest exchange in the world, that you got our money. Hey, CZ, baby, you got some money. I hope so, buddy. So, guys, we are heading down towards the end of 2022. And the question that everybody is asking is crypto dead? And like I said, I myself had to question it because a lot of my clients were affected by it. I've been affected by it. People that I know very closely have been affected by all the challenges. But everything that we've seen, experienced this year has kind of been centered around centralized institutions, CeFi. And the fact of the matter is, CeFi goes against the principles of cryptocurrency and Bitcoin that were initially initially espoused by Satoshi when he created Bitcoin. That idea of a decentralized, transparent, immutable, censorship resistant, um, available to everyone form of value transfer money. And so, what I would say is that crypto isn't dead. I think crypto is very much alive, and crypto is reinforcing to us that the challenges that Satoshi saw in the traditional financial system, those challenges that are endemic to humans, we've adopted quite a few of them into the crypto space. CeFi is not what crypto is, and we understand the value of CeFi. We understand that a truly decentralized structure is not ready to be adopted by the masses, and so we need CeFi to onboard the first billion, the second billion, the third billion people into crypto. But yes, it has affected us significantly. The properties of Bitcoin has not changed from 69,000 to where it sits now at just over 17,000. Bitcoin continues to operate, producing blocks every approximately 10 minutes, never been hacked, continues to transfer value across the world instantaneously without the threat of counterparty risk. Bitcoin continues Bitcoining. I see Deb's asking, what happens to all those properties? So, I mean, the intention is that anything that would have been purchased with ill-gotten gains should be recovered. And that's what the whole bankruptcy proceeding is about. Hopefully, they're able to claw back those properties. I don't know what they're going to do for all the money that was given to politicians. I see some politicians, instead of giving back the money, which I think would be the smart thing, they've decided to donate it to charities. I don't know who control these charities, but that's me, my tinfoil hat self talking again. So we hope to see more and more information about that come out as that case gets underway, the criminal case, the civil cases that are going to come, as SBF, some of the people who have been promoters of his exchange have find themselves in civil battle as lawsuits have been filed against them. But getting back to my point, I think the value proposition of Bitcoin has never been stronger. The value proposition of having a trustless means of value transfer has never been stronger. The ability to custody your own funds and not have to trust someone else or some other organization with your funds is and has been made ever more important, and that case has been made even stronger, beginning with the Ottawa protests, continuing on to the conflict in Ukraine and Russia, continuing on to conflicts all over the world, whether it's in Yemen, whether it's in Somalia, whether it's in Palestine, whether it's CeFi companies going under. whether it's crypto exchanges filing for bankruptcy, the idea of self-custody of your value is very, very important. I don't think we are there yet because there are a lot of things to consider when you talk self-custody. Should something happen to you, does your family know how to access your wallets? With the information that you've given them right now, will they be able to access your wallets? If your house were to burn to the ground right now with your phone, with all the notebooks that you have, with your safe in there that's not fireproof, would you be able to access your crypto funds? I had to ask myself those questions, and the answer was no to quite a few of them. So, God forbid something had happened to me earlier today, all my crypto, all my NFTs would probably have been lost. So, the idea of self-custody does come with a lot of challenges. I don't know that our current environment is ready for it. We definitely do, as I've said before, we absolutely do need regulations to protect those people who want to participate in the space, who want to choose to have an organization and choose to trust an organization to custody their funds. We need their funds to be protected. We need to ensure that people who have not given permission for their funds to be used for any other way, but to be stored by these custodial exchanges, that they to be protected. So I'm very much for regulations in that CeFi space. And I'm very excited to see what gets built next. I'm very excited to see what gets developed as a result of this turbulent 2022. How do we make the next step? How do we onboard the next million people in the Caribbean, the next billion people in the world? We have no idea who the winner is going to be. It may not be OpenSea. It may not be Binance. It may not be Ethereum. I mean, it will be Bitcoin. I mean, just saying. But everybody else, who come in second? But yeah, exciting times ahead, guys. And I'm going to be here every week, week after week. If nobody's here with me, I'm going to be here with my cognac, talking crypto. Because as I say always, you cannot put the genie back in the bottle. Adoption is inevitable. Guys, thank you so much for being with me as we wound up 2022. We have a couple more episodes before we actually put a close on 2022. Hoping to do some giveaways next week. It's Christmas. We had to do something. We had to give you something. It's a beer market. We cold. It's winter time. Growing my beard. But free bags. We got to give something. So I look forward to seeing you guys next week. I have a very exciting conversation happening next week. So looking forward to that as well. Guys, thank you for being with me. Illuminati out. Be blessed.